Hey, it's Tom here and welcome back to the channel. So Nick Sleep is an investor who has really risen in popularity in the last year or so. He is an investor based out of the UK who ran the Nomad investment partnership for a little over 12 years and ended his career in sort of professional fund management with Nomad with a compounded annual return north of 20% per year. Nick Sleep is an investor who I first heard of through Moat and listening to Moat's recent transformation and investment strategy, moving from the 50-cent dollars to more of the longer term compounder type businesses. And Nick Sleep had a really significant influence on that shift in Moat's strategy. Nick Sleep, along with his partner Zach, was also the topic of one of the chapters in this book, Richer, Wiser, Happier by William Green. And this really talks through in quite a lot of detail Nick Sleep's story when it comes to his investment partnership. He actually started out his investment partnership being a very deep value type investor, to the point where he was going to Zimbabwe and buying beaten up cement companies, buying stock in those businesses at like 10% of replacement cost during a period of hyperinflation in Zimbabwe. So he was really getting deep into the weeds, looking for deep value opportunities, and eventually transitioned to actually having a very, very concentrated portfolio. By the time he closed the Nomad partnership, he really owned basically only 3 stocks, that being Amazon, Costco, and Berkshire Hathaway, each of which we all know have been spectacular performers long term, in particular a business like Amazon. Now, Nick Sleep ended up closing the Nomad investment partnership in late 2013, and he actually then continued to, as far as we can tell, hold those exact same stocks personally. So he continued to own Amazon, he continued to own Costco, and also Berkshire Hathaway. And it really caught my attention in the book Richer, Wiser, Happier, where Nick basically explains that by the time we got to 2018, Amazon had done so well that it had become about 70% of his personal net worth, and he actually ended up selling out of half of that position. And if we fast forward another couple of years through to 2020, William Green, the author of Richer, Wiser, Happier, actually got the chance to speak to Nick Sleep again, and by that time Nick Sleep mentioned that he'd actually found a home for that money. He'd found a home for the 50% of the Amazon stake that he'd sold, and that was in an online fashion retailer in the UK called ASOS. So many of you probably already know that one of the main ways that I like to source investment ideas is by following the super investors and seeing exactly what they are up to. So in this video, I want to basically give my initial thoughts and my initial impression on ASOS as I look kind of under the hood at that business. I'm really yet to do a full kind of deep dive on the company, but just want to give some, like I say, initial impressions and also some of the things that I've learned so far. And I also want to share some of the things kind of on my to-do list to continue to look into to figure out if I am interested in making an investment in ASOS. And have to give a shout out in particular to Hamish Hodder in this video. Hamish and I recorded a podcast maybe a month or so back, talking quite a bit actually about Nick Sleep and this concept of scale economy shared, which I will get into very shortly. And Hamish also recently did a video on ASOS, which I would definitely recommend checking out. Now, whenever it comes to learning about one of these new businesses, particularly from a super investor, one of the things that I always really like to see, if it is available, is to get the thoughts, I guess, straight from the horse's mouth, straight from that super investor on how they think about that particular stock. And that's not always something that is doable. But Nick Sleep actually does have several investor letters, which are very good. And if I just do a quick like Control F and search ASOS through that PDF of all of his letters, the word ASOS is actually mentioned 3 separate times. So I just want to kind of walk through initially what Nick Sleep actually has said about ASOS in some of his investment letters, and that should be pretty good background for us to start looking into the actual underlying business. Now, the first time ASOS is mentioned is actually from a Jeff Bezos quote that Nick Sleep used in his letter. Jeff Bezos didn't specifically mention ASOS, but Nick Sleep has kind of added in some brackets on his thoughts kind of in this quote, which you will see on the screen here. The quote from Jeff Bezos goes that there are 2 ways to build a successful company. One is to work very, very hard to convince customers to pay high margins, the Colgate's, Nike, Coca-Cola model alluded to above. The other is to work very, very hard to be able to offer customers low margins. And I believe this is Nick Sleep adding in these brackets, by the way. The Walmarts, Costco, AirAsia, Amazon, and ASOS model. They both work. We're firmly in the second camp. It's difficult. You have to eliminate defects and be very efficient, but it's also a point of view. We'd rather have a very large customer base and low margins than a small customer base and higher margins. Now, the next time that Nick Sleep actually mentions ASOS, it doesn't give us a whole lot of insight about how he's actually thinking about the business, but he says this, and he's talking about it in the context of implications for long-term investors. So he says the opportunity for Nomad's investors comes from realizing to whom these firms are more valuable. Certainly not the short-term investor who'll be indifferent as to whether Amazon, ASOS, or AirAsia will be the most valuable retailer, fashion e-tailer, or airline in the world in 10 years' time. The institutional fund manager may be similarly indifferent. The collective professional myopia presents the true long-term investor with the spoils, but the mechanism for this wealth transfer from short-term holder to long-term investor is subtle. And finally, the last mention of ASOS in the Nick Sleep letters is that the best entrepreneurs we know don't particularly care about the terms of their compensation packages. And some, such as Jeff Bezos at Amazon and Warren Buffett at Berkshire Hathaway, have substantially and permanently waived their salaries, bonuses, or options packages. We would surmise that the founders of the firms Nomad has invested in are not particularly motivated by the incremental dollar of personal wealth. When we asked Nick Robertson, the founder of ASOS, whose paper net worth had increased hugely since we have known him, whether now he's a rich man, he has thoughts of leaving. His face lights up with the future possibilities of his firm and says he is having more fun now than ever. In this aspect of his life, he has moved on from monetary rewards driving his behavior, and we are sure the business will be better for it. And if you continue to dig a little deeper actually on Nick Sleep's history with ASOS, in the book Richer, Wiser, Happier Again, it actually mentions that Nick Sleep and Nomad actually have quite a long history in terms of being invested with ASOS. They apparently made their first investment in ASOS at British pounds per share and rode it all the way to £70 per share. And if we look at the stock price today, it's actually down quite significantly. It's now in the sort of £30 per share range. So potentially there's some stars kind of aligning for me here. We've got Nick Sleep with a phenomenal track record with a business that he has known and understood and been invested in for a long period of time. He's made an investment in it as recently as maybe 2019 or 2020. And since then, the stock has had a really rough run and the price is actually down significantly from when the super investor that is Nick Sleep actually purchased into the business. So a second shout out to Hamish here. I'm actually going to borrow a chart that he put up in his video, which really demonstrates the business model of ASOS as an online fashion retailer. Now, like we saw in that Jeff Bezos quote, there's sort of two ways to, I guess, take over the world and be successful in business as Jeff Bezos saw it. The first one is to have a great business like Coca-Cola where people will pay you very high margins. And the second way is to basically be the low-cost provider and offer goods very cheaply and have lower margins but a larger kind of number of customers. Now, I'll put up a chart here. Like I say, this is straight from Hamish, so thank you, Hamish, if you're watching, and definitely go and check out Hamish's video if you haven't already. And this basically shows a couple of those core aspects of ASOS. So over time, we've seen the average selling price basically be flat or even slightly downtrending. So as the business becomes more efficient and gets these economies of scale that Nick Sleep talks about all the time, they're really doing their best to try and return those efficiencies to the customer and effectively grow the moat of the business and become a more compelling sort of value proposition for the customer. So that's the first thing we see. And in terms of consumer spending habits, we have seen the total number of orders and also the average revenue per customer go up over time as the business, becomes more efficient and returns a lot of these scale economy benefits to the customer. Now, in terms of the growth of revenue and also gross profit, so taking out any of the sort of costs directly associated with selling the products that ASOS does sell, the growth has been spectacular. They've got a long-term compounded growth in revenues in about the 20% per year range. This is still a relatively young business in the grand scheme of things. So right back in 2006, they were producing about 46 million British pounds in revenue. If we fast forward to today, they are now producing north of 3 billion Great British pounds. So they've experienced substantial growth since starting in sort of the first decade of the 2000s. Now, the part of the equation with ASOS that is not so smooth is actually the net income and the profit margins for ASOS. So I'll put another chart up on the screen here which shows the net income for ASOS. Again, it's growing over time in a compounded fashion, but it is much lumpier than the revenue growth. And this is pretty typical, frankly, of really low margin businesses. If your profit margin in a particular year goes from, say, 3% to 4%, that is like a 1/3 growth in your profit margin and therefore your net income, even if you have absolutely no revenue growth. And by the same token, if you go from 4% one year back down to 3%, that is about a 25% decrease in your net income, assuming that you have no revenue growth. So in some of these low margin businesses, if those margins aren't super consistent, you really can see some quite volatile net income from year to year. And if we look at the stock for ASOS, again, even though the revenue growth has been super consistent, I think the lumpiness in margins largely explains a lot of the really lumpy performance in the underlying stock. But even with that said, if we look at some basic valuation metrics for ASOS right now, I think something probably like a price to sales ratio is going to be quite useful with a business like ASOS. Again, if you have a company that has very lumpy margins, something like a PE is probably not going to be particularly useful. So I'm going to jump to an EV or enterprise value to revenue chart here. I'm not someone that typically likes to use sales multiples, but I'm going to basically use a sales multiple here for ASOS as a proxy to eventually kind of normalize margins and get to like an earnings multiple for ASOS, which you'll see very shortly. But in terms of the current state of the enterprise value to revenue multiple for ASOS, we're currently trading at about 0.9 times sales on an enterprise value basis. Now, like I said, I don't particularly like sales multiples, especially used on their own. In this example, I really am just going to use that sales multiple to try to get to some sort of earnings multiple. So if I use basically the margins chart that I showed earlier in this video, that will give me a rough idea of what maybe a normalized kind of margin looks like for ASOS. So it's been fairly lumpy over time. It's been as high as about 6 or 7% when the business was in its very early days. In more recent years, that has fluctuated anywhere from, say, 1% to about 3.5%. It looks like they had a pretty rough year in 2019, and those profit margins got down as low as about 1% or even slightly under. But in a typical year, it looks like they're tracking roughly around 3% net margins. So if I assume that maybe 3 or 3.5% net profit margins is sort of a normalized margin for something like ASOS, and again, I have to do more work on this to truly understand it, but let's just roll with that for now. If we take the sales multiple of about 0.9 right now, divide that by our 3.5% margins, that gets us to a PE ratio with sort of normalized margins at current prices of about 30 times earnings. So at 30 times earnings, it's certainly not something that kind of leaps off the screen at me, it being very cheap, but it potentially is a really great business because that's exactly what Nick Sleep buys, and it's been growing at really fast rates. And if it can continue to grow at around 20% per year, or even maybe slightly under 20% per year, potentially it's compelling, but there are certainly a few more things that I need to figure out. And if you're interested in kind of what those things are that I want to move on to next and kind of focus on, these are a few things that I just jotted down last night as I was looking into this. So the first thing I want to understand is competition. You know, is there a chance that Amazon, one of Nick Sleep's other investments that he sold out of, at least sold half of his stake in, is there a chance that Amazon can just come in and destroy a business like ASOS, or are there other online fashion retailers in the US or in Australia or New Zealand that can potentially be quite detrimental to ASOS's future growth? So that's the first thing I want to understand. The other thing I'd be interested in doing is what I would call like a basket of goods kind of analysis. So much like the CPI for inflation collects a basket of goods and sees what the prices are and how the prices of the things in that basket change over time, I want to kind of do the same thing with ASOS. ASOS's business model is to be a low-cost provider of clothes and shoes and so on. And as I understand it, Nick Sleep did a similar sort of analysis with his investment in Costco. So he looked at a basket of goods in Costco, compared that against the price of those same goods at Walmart and other other grocery stores, and I basically want to do the same thing with ASOS. So I want to go through, pick maybe 5 or 10 different items of clothing and footwear, see how much they cost in different countries on ASOS, and then compare that to basically the competitors and see whether there is a clear gap between the prices that ASOS are able to offer, including shipping and everything, versus some of their competitors. The other things on my list are to look into management. Nick Sleep has obviously spoken very highly of management already in his letters, but that's something I'd like to look at. Like I've mentioned already in this video, margins are going to be very important to understand what the future cash flows look like for the business as well. So I want to do a bit more work on just understanding these sort of target margins, I suppose. And then once I've got through all of that, obviously the final step in any sort of analysis for me is to understand the valuation and figure out if I think the current price for ASOS is attractive. So those are my initial thoughts on ASOS. I hope you appreciated them, and yeah, it's a really interesting one to see a very, very concentrated super investor make a relatively recent change in their portfolio, and then to see the stock down, fairly significantly from where it was purchased potentially. So it's certainly one for my watch list, and hopefully one for yours. If you are already invested in ASOS or know the business quite well, I'd definitely be interested in any thoughts on it down in the comments below, particularly on the points that I mentioned towards the end there that I still need to look into. But yeah, I do hope you enjoyed the video. If you did, please hit like and also hit subscribe on the channel if you haven't already. But that's it from me for this one, and I will see you in the next video. Cheers.